All right, good morning, trading champions. How are you? All right, welcome to Stock Analysis Friday. Purpose of Stock Analysis Friday is simply for you to type in stocks that you're interested in me analyzing from a technical standpoint. And you can type those in the comments area, so feel free to do that at any time. Type in about 3 at a time and make them caps. You can always come back and type another 3 a little later on in the presentation. We're going to be here for about half an hour, and I am going to cover the market very briefly before we dig into your stocks there. And then I got a couple stocks I'm going to share with you as well. And just for the records, today is February 14th, 2025, Valentine's Day. So I guess happy Valentine's Day, right? But anyway, let me go through some administrational items, and then we'll jump in to the actual analysis of some markets here. All right, first thing I have to cover whenever I talk about stocks, investing, trading, speculation, whatever you want to call it, is, of course, the risks involved. I think we all know there's risks involved whenever we look at investments or even trading the financial markets. So, definitely keep that in mind. Always trade with money you can afford to risk, called risk capital. And actually, on each and every trade, you should calculate your trade size, which is your bet size, your position size, and then limit that or adjust that based on where you plan to get out if the trade does not work. And that's called a stop loss. And then at that particular point, know what your risk is going to be. So actually, what I'm really saying here is before you actually take a trade, know your risk on that individual trade before you go into it. And if the risk is too high, then drop the trade size so it's comfortable or within your limits for your particular account size. That's really important. Big part of successful trading, of course, I think everybody knows that, is risk control. It's not just about entries and exits, because you do want to have an edge, but the risk control is what puts that edge usually into the edge territory, so to speak. All right, because we're going to be looking at stocks, I'm going to give you my opinions, my analysis. Please run those by, whatever I say here, basically run it by your financial advisor or whoever manages your money to be sure a particular stock you're interested in or I recommend is suitable for you. I don't know your personal situation, and of course, they certainly should. All right, what else can I say about risk? I guess past performance doesn't guarantee future performance, and I think that's about it. Okay, so just keep all that in mind. All right, now when it comes to education, we at traderscoach.com have been in the business now for over 30 years. Oh boy, that's a long time. But in any case, I've written several books. We have a lot of software that's used in over probably 80 plus countries worldwide now. We have some hedge funds using it as well, a lot of personal investors and so forth. And in addition to that, we have online education, all right, above me on YouTube, of course. And then also, too, we have several subscription services, like we have a weekly market analysis where I go into, I take a deep dive into the major indexes, give you a forecast, tell you what I think is going to happen for the upcoming week, etc. That's actually called the Market Opportunity Report. And that also includes stock picks too. And then finally, I have basically what's in front of you here, a lot of books, and probably most people get these on Amazon. But my newest book, The Art of Trading, second edition, just came out about a month ago. And very excited about it. It's 608 pages. Really, I think, put a lot of effort in that. So I really think that's probably one of the best books I've written. However, I also have written books on other forms of specific technical analysis, like the Elliott wave, and then there's, of course, money management as well. So if you need help in money management, go to one of those books in front of you, because that'll tell you how to get started, especially if you're new in the trading business. All right, then finally, when we look at charts today, we're going to be looking at charts using multiple time frame analysis. I'll go over that a little bit, but we're also going to be using a lot of the software I created as well. And many of you are already familiar and using that, of course. But I'll put a link at the bottom of this presentation for the recording, and I'll put a link to our software, a link to our books, and things of that nature, so you can check that out on your own later. And then a YouTube presentation would not be a presentation without the like, subscribe, and share screen, right? All right, so let me come out of this, and I'm going to take just a quick dive into the overall markets right now. Okay, so the markets remain in an uptrend. Now, if you belong to one of our subscriptions, you know that we are in a significant target range right now for a bull market top. So what does that mean? That means that basically we're actually waiting for the market to rotate into a bear market. Hasn't done that yet. All right. So for right now, it's business as normal, the way it's been since really 2009. That's when the bull market really officially started. And only interrupted a few times through some presidential elections and COVID, right? Well, I guess the 2008 financial crisis too, right? But it resumed right away. What we're talking about happening at some point is the shift from an overall bull market into a bear market. And bear markets can last anywhere from a year to 3 years. Okay, so that I think is on the horizon. The long-term charts suggest that. The Elliott wave forecast says we're really close, if not right there. So just be aware of that. But for right now, if you look at the Dow Jones in front of you on basically the center and far right chart, you can certainly see we're above all trend lines, and it's a bull market. All right. We're starting to see a little bearish divergence on some of the charts here, so we're keeping an eye on that. We've got support levels like we talk about in our subscription services that we're keeping an eye on, because a break below certain support levels could indicate a bear market. So we've got different support levels indicating the importance of the break in each one of those. All right, before I keep going here, let me just tell you what you're looking at here. So you're looking at 3 charts here. This is the 60-minute chart over here, which means every price bar represents 60 minutes or an hour. The chart in the center is the daily chart, which represents, of course, a normal type of chart you probably look up most of the time, where every price bar represents a daily price bar. We'll call that the intermediate look at the market. And then on the far right is a weekly chart where every price bar represents a full week of trading activity, and that's the long-term chart. So the reason I have this set up like this, it's called multiple time frame analysis. We have all our software loaded on it, but the idea is that when you look at a market, you're looking at 3 different aspects of any market I type in there. So this happens to be the Dow Jones. So I'm looking at the short term on the left, and you read it from left to right. The daily chart in the center, intermediate, and the long-term aspect on the left. So before I take a trade, I may look at the 60-minute chart on the left to make sure we have some form of an uptrend, or at least some type of momentum breaking to the upside before I take a long trade, opposite for a short trade. You can use that for day trading if you want to, or long-term investing or position trading, just to change the time frames. All right, so that's kind of what you're looking at. So I'm looking at the markets, and I could show you the S&P, and I could show you the NASDAQ, but they're all the same. Okay, they're all trending up at this time. They look kind of just like this. So in any case, the market at this particular standpoint today, February 14th, is still in a bull market. All right, one stock, a couple things I want to show you, and then we'll jump in. First one is UNG. All right, so let me type that in here. UNG is an ETF for natural gas. Now, if you prefer to use futures, you can do that. But what we think we may have here, and this is my gift to you guys, is I think we may have a bottom in place on natural gas. Now, we're not going to talk about the fundamentals of why that's in place, the fact that now maybe we will actually export natural gas at this point, and maybe that will increase demand, which causes markets, of course, to go up. But I think we got a significant bottom in natural gas here. And I think that bottom was achieved basically fairly recently in 2024. And we've had a nice spring off the bottom. We'll have pullbacks and so forth. But I think at the very least, we should get around $61 to $92. And we're sitting right around the $20 mark. All right, not such a bad thing. You have to have your stop pretty far away at this point here. So keep that in mind because it's gone up so much. So you probably want to have your stop at least under this level here. If you started when our software generated a buy here, your stop would be under there. Okay, so that's just what I'm going to throw out there. You can talk to your financial advisor about it, see if it makes sense for your portfolio. All right, I guess I should talk about Bitcoin. Let me see if I can bring that up. Sometimes the data gets a little funky on Bitcoin. I'm importing the data from Coinbase. I'm using NinjaTrader. Sometimes it is slow loading and I don't want to take everybody's time here. So Bitcoin also, okay, good. Maybe we get a load here. Perfect. All right, so Bitcoin, I'm going to just open up this chart real quick. Everybody's interested in the currencies. So here's the thing with Bitcoin. All right, it's kind of right now bouncing between a high, a fairly recent high of around 109 down to a fairly recent low of, in the lower 90s, 95, maybe not lower, but maybe 90, well, maybe 92. So kind of lower. All right, so that's kind of where it's bouncing around. It may, all right, bounce down and go back in to this target zone, which it already visited earlier. Okay, we call this a buy zone, and it's still technically a buy zone. So if it drops back down and you feel like you missed Bitcoin, this could be an opportunity for you to accumulate some. Again, talk to your financial advisor to be sure an investment like that is suitable for you. However, our target, our bull target, is way up here between 123 and 144 on Bitcoin. So when it gets there, that should be the end of a major move up. And after that, we could see even Bitcoin go into some form of a bear market. Okay, so keep that in mind. I'll let you decide what you want to do with that. I wouldn't jump in here yet because I'm really not sure exactly if we're going to go down or up. It's very possible we already went to the target zone. We go up from here. But I don't want to tell you to buy here until it starts breaking out. It hasn't broken out. We got a bearish pyramid. We've got a lot of bullish fair value gaps still sitting unresolved, untouched in that retracement area. And we just are coming down off a bearish one. So a little dicey over the short term. Long term, I think we should see a recovery. And Bitcoin, of course, should make those eventual all-time highs. We also have a very strong momentum on the right-hand chart at this point. So that's a good sign as well. So I do think it's pretty clear that Bitcoin will eventually top in those levels I told you. Question is it going to take one more dip or go right away? That I'm not 100% sure on, okay? But we will see what the market tells us. That will talk to us. Okay, so let me go and now jump into what you want me to look at. And Eleanor, I believe you're the first one. Welcome. ALAB. ALAB. So let me type that in for you. And we'll take a look at that. And when you type in a stock, tell me if you're long, maybe even short, or you're just kind of thinking about it, but not sure about what to do with it. Because that will help me tailor my analysis for you, okay? All right, so the daily chart, the one in the center, all right, I want to focus on first. And if you notice here, you had a beautiful run up, all right, but now you've had a correction, all right, and that correction here is sitting, to me, it looks like at a prime fib level. So let's take a look at that. And we're sitting here right around the target zone. Okay, so that's good. Okay, my problem with that, however, is that if you look at a couple of our indicators, which really are very accurate, one is the PTF down here. This has a 75% probability rate, and that's red. So that's showing that we have probably more lows coming. So I don't think the correction's over. Let's see what the 60-minute chart, if it agrees with that. All right, so we got a bearish trend. Again, if you draw a trend line, sometimes simple trend lines are the best. If you draw a trend line down like that, you can see the trend is still down. It hasn't broken. So I wouldn't want to go long on this until that breaks. We do have a yellow PTF, which is a good sign. So one of the some of the short-term momentum is starting to dry up, but we still have some downward pressure. All right, long-term chart on the right, our weekly chart here indicates wave 3, wave 4, and after that, a big move up. So this is a wave 3, this is a wave 4. This is technically not a wave 4 on the weekly chart. So I kind of misspoke there. And the reason it's not is because we don't have a red PTF yet. So this is still a minor 4 inside a major 3 on that, which kind of makes sense because you won't reach the top of 3 until wave 5 is over. So at this particular point, you know, if you're in it right now, Eleanor, and this might be an investment for you. Yeah, you're going to have some more lows, but I'd stay with it. Okay, you've been with it. If you've been long through this whole journey down, there's no reason now to exit. If you were up here and right near the top where the pyramids told you to get out, and we had a short trade put in, that would be different. But you've already gone down with it. So that's kind of where I would put it. If you want to buy this, why don't you come back next Friday? We'll take a look at it to see how much lower, if any, it's down, and see if the trend has shifted yet. Okay, I don't want to put you in. I don't want you to catch a falling knife, so to speak, until we're pretty sure that the pressure down is over. Okay, so hopefully that did the job. Stuart, San Diego, Stuart, how are you? A little rain, I hear, in San Diego these days. So let's see how that, hopefully that'll put the fires out over there, right? Oh my gosh, you guys have really had some weather. All right, so SNOW, let's see what we got cooking on this. Now, let me see, where are you, Stuart? Okay, so there you are. All right, so I don't know if you're long or short. So I'm going to assume you're long because I think we may have looked at this before. Again, a couple ways to I guess tell you if you should stay long or not. Let's just first draw a quick trend line. Okay, again, I know this is kind of a very basic form of technical analysis, but sometimes the basics work best. All right, so there you have it. You've had a pullback and you've had a resumption in the trend. Okay, you've got a little bit of movement down today. Okay, a little bit of, but you know, you've seen that before. It still hasn't broken the trend line. Let me open up the weekly chart. Let's take a better look at this from a long-term perspective. All right, first of all, we only go back to what looks like October 2020. So it's not a very old stock. In the realm of stock age, this would be kind of a baby. All right, so you've got a problem here with the channel, and I'm going to draw that in here. So basically, you've got an upper limit here and a lower limit here. So, you know, you haven't really, you've kind of drifted sideways really since April, right? Actually longer. I mean, look at it, it's been sideways. You have a yellow PTF, so that's no longer green. All right, so I'm thinking if you're in this, I would put, you know, this is not one I would take at this point, but sometimes you get stuck in things, right? So if I was stuck in this, I'd probably put my stop at this pyramid here. It's kind of giving us an ideal place for a stop. So I'd probably do that. And I wouldn't add into anything else or anything like that. But that's kind of what I would do. If you want to put a stop at the trend line on the center chart, you could do that. You do have bearish divergence building here. So that's not a good sign for this to continue much longer, but sometimes it can continue longer than we think. And you do have a green PTF on the 60-minute, which is saying that this pullback here is not yet the beginning of a change in trend. So I guess I would just hang in there until that trend line is pulled out. You can always draw another trend line once you get another high on the 60-minute chart and use that for a short-term basis. Okay. All right, Jim, how are you, fellow day trader? All right, USO. All right. For those of you that like to day trade, we do have an active day trading room, and we look at a lot of different styles. We trade the applied reality trading system. Sometimes we look at scalping particular programs and trades, styles, I guess, so to speak. So it's a fun room in that we do something different a little bit at times. So if you want to learn about day trading and some different styles, it's really a great room for that. All right, USO. Let's see what is going on for the ETF for oil. So I'm going to bring up the weekly chart. And this is one, we're expecting highs on this. My target's around 100 to 110, right around in there. But it's drifting, okay? If you draw a trend line, you can certainly draw that. And it does slant somewhat upward, but not very ferociously, okay? There it is right there. But it is kind of a move up off its bottom. I do think this is a significant bottom. I've said that for months now, and so far it's holding. This indicated some form of 3, 4, very lackadaisical 5, but sometimes that's, what we get with 5. 5 is never as enthusiastic as wave 3, but it eventually takes out the high of wave 3. So, that's kind of where we're at now. I think something like a Tesla might be better to look at, or some other forms of stocks may move a little faster than USO. But USOs, if you're bullish there, you just stay with it, okay? If you want to have a hedge against the price at the gasoline pump when you fill your car, go ahead, knock yourself out, buy a little USO there. Okay, we've got green PTFs for the most part, but we do have a pullback in place. So you might want to wait for that to change. How do you know it's going to change? Well, you can draw a trend line, and you can also wait for a move past the trend line, a pullback to make sure the bottom holds, and then higher highs and enter a long trade there. That's one of the most test-proven ways to enter the market. All right, thanks, Jim, for sharing that. All right, so let's go to Eleanor. Go long. Is Dave the stock or is that a person? Let's type that in. Go long, Dave. All right, I feel like I'm at the football, watching football. Go long, Dave. All right, so here's Dave. All right, Dave is a stock. All right, so you are maybe long or thinking about going long. I would probably at this point refrain from going long, simply because, again, my feeling is that, well, you got a breakout here. Let me just take a look before I really say something here. Let me just take a look at this. I want to see where the target would be. All right, so this stock only goes back to 2022. Right away, I don't like that because I don't like really young stocks. It's hard to get a long-term view on it. All right, so possibly here our target is 192 to 308. We're at 117. You did just get a pyramid trading point entry on this, so that's ideal. We had one earlier, which would have been a little better down in the 50s. You could have probably close to double your money already. So now, are you getting it too late? Are we going to get a pullback? We have a yellow PTF. So ideally, I wish we were actually right about here looking at this, because even though this is good, okay, this is the second P pyramid in a row, which is fine, but we could get a pullback and then another surge up. So if you go in now, you have to brace yourself that, okay, I'm going in because I don't want to miss it if it takes off from here, which it could. All right. Or do I want to wait for a pullback and go for the safer bet? All right. That's something we encounter in trading on all time frames whenever we look at markets. Right. So that's always a personal decision on what you want to do. If you want to go in with $10,000 and you want to put in 5 now and keep the reserve at 5 if it pulls back, great. You have to decide that. Okay. So yeah, I mean, definitely it's bullish, right? It's a long trade. Again, we can draw a couple different trend lines on this. We can start here and go like that. All right. Or we can draw a very short-term one like that. Okay. So no matter how you draw those, we're up and the target is 192. So I'll leave that for you. We did break out of a channel, which is kind of nice. So, I'm going to put that on the buy list. And the reason I'm going to do that is because It does have enough profit. The risk to reward is 2-to-1 if you put your stop at the bottom of the pyramid and shoot for that 192 to 308. So, from a technical standpoint, we're getting in a little late, but also from a math standpoint, okay, there it is. All right. So we'll call Dave a long one. Go long, Dave. Right. All right. Very good. Good job, Eleanor. Okay. So let me see. I lost my place here. All right. There you are. Okay. Go long HIMs. Boy, we got some interesting ones here from you today, Eleanor. All right. Go long, Dave, and go long HIMs. All right. Hopefully you're already long on HIMs. Okay. All right. I don't like to chase markets. And when I look at this, I feel like I'm chasing a market. Yes, it's bullish. It looks really good. But the pyramids actually had you in down here. And if it was a long-term trade here, so you would have been in under 20 bucks if you use the pyramids. Actually, the pyramids would have gotten you in way down here. I just saw, yeah, $20. Okay, so that's about right. So the pyramids would have gotten you in at 20 bucks, and you could wait for another pyramid for your stop, or once again, just draw a trend line, okay? And stay long until the trend line's broken. And that will save the day, okay? So I'm not going to recommend this one, even though, hey, it's moving up. It's probably going to go higher. PTFs are green on some of the time frames. My problem is you could get a significant pullback into the $50 range, maybe even 45. All right, and that's a pretty big pullback. So I'm not gonna recommend that. But if you're long, hey, good job. All right. All right, Kamel, how are you? All right, Apple. Our old friend, Mr. Apple. Just did an update on my Apple Watch. So if you have an Apple, not an Apple Watch, Apple phone. If you have an Apple phone, there's an update. All right, let's take a look at this bad boy tech stock. All right, techs have definitely controlled the market on this bull run. Well, not totally. I guess the Fed's controlled it by pumping so much money into the market. But in any case, that's a lesson for a different day. But if we go ahead and draw a trend line here, you can certainly see, look at all the bullish pyramids now, current, present. But, it's, I always like to look at this. Is it better to get in down here or up here? And the answer is obviously up here, right? So you gotta, it's pretty orderly though. It's a pretty orderly trend. It's had some pullbacks. So I actually kind of like that. My question is, let's see. I guess the question is we are going to go up further before getting a pullback. And I guess I would look at Apple as kind of one of those stocks that if you're going to short-term trade it, you got to pay attention to the daily chart. And the daily chart's not triggering me any buy signals. The 60-minute chart is, but it's already, you'd be chasing that time frame. So if it was an investment, I would just hold it, okay? It's in an uptrend, but I wouldn't be trading it, okay? Not right now. All right, Frank, ZM. Let's see what's cooking on old ZM and wants to go long. I understand why he wants to go long, because he's looking at this as a bottom and he's looking for a possible breakout in progress. Green, green, green on all our indicators. All right, so you can't really beat that, right? All right, and we have, let me just open this up so you can see it better. This is a weekly chart, so keep that in mind. So we've had an entry already generated in the 70s. Okay, but this is still green. This is still green. We've had a little pullback. Now, sometimes these pullbacks go into an ABC correction before they go. So that's possible. Also, too, we haven't really had a big pullback yet off the bottom, right? So we've gone up, and usually you get a decent pullback after that first surge up. So that we have to keep in mind. And sometimes those first pullbacks can be 100% of the first leg up. So that's the tricky thing about, that's called a wave two. And that's a tricky thing on a wave two. We've already hit a normal pullback area. Okay, that's a good sign. Maybe there's a sub under the covers here, so to speak, an ABC already done. That's possible. But then we could have a broader ABC, and that's what makes trading so fun, is when you have two different results. Okay. You get that a lot. Okay. So what do? Let's go to the lower time frames and see what they say. All right. So we got the characteristics of the possibility. Well, let's look at this bearish bar up here. Okay. That's a very bearish bar. We came up to it, came down. You got a fair value bullish gap here, which is interesting. So, that could be a break in structure if it goes up. So what do you do here? You got green here. I like that. I would wait at this particular point for, I think, a green pyramid trading point. So I'm not going to recommend that yet, but I do think if we have a move back up, then we'll continue on to higher highs. But I wouldn't put out the possibility of trading lower, and with a bearish pyramid on that daily chart, along with a still red owl on the 60-minute, I'm going to shy away from it. Okay. If you were already long in it, I would say, okay. So, whenever I look at a stock for a trade, is it an A setup, a B setup, or a C setup? All right. And if this is probably a B. Okay. So I don't want to recommend a B. Thank you, Frank. Okay. IWM for Frank. Okay. One of Frank's favorite ETFs is IWM. And you usually go short on IWM, I think, Frank. But in any case here, let's see if that makes sense right now. All right, so let me open up the weekly chart, and let's see if we've had any type of break in the trend line yet. And we might have. Okay, we broke it and then bounced above it. We still got a green PTF and still an active bullish pyramid. Okay. Short term, we've had a red pyramid here. That has been neutralized because the market took out the top of it and then drifted sideways. So let's see if we have any type of situation there. We really have a channel. Okay. There's no real trend line you can draw to the upside. So we have this kind of channel here. Maybe you got one short one here and then one down here. I'm going to put it right there. Okay. So that's kind of where we are now. Now on this chart here in the far left, we have a bullish pyramid, but a red PTF. So that's showing that actually you would not want to take that green bullish pyramid with the red PTF. So I'm going to say short, I think, looks pretty good here, but I wouldn't take it because it's not an A trade. Okay. It's probably a B or C trade. So stay away from that one. Okay. All right. Gene's telling everybody happy Friday. All right. Let's see. Let me go through all Gene's little comments here. Frank, you're getting a happy Valentine's Day. All right. June, how are you? Okay, June. Lily, LLLY. LLLY. Let's see how this one is doing. Big cap stock, big pharmaceutical. All right. So let me open this one up on the weekly. And, oh, I love these. Okay. So this is in terms of an Elliott wave for you Elliott waves out there. You can't miss it. Look at the price structure. And then the owl is indicating a wave 3 as well. That's one of our indicators that we also use for Elliott wave counts. And there you have it. So the question is, what's it doing now? Well, it's come off its top. And the first thing we have to do is go here and see, because we do have a red owl now. So I'll go down and see if I can locate wave 2. All right. And draw that up to wave 3. And my target for this is 654. All right. Down to 454. So this would be a buy zone. All right. Because after this, we would expect more highs. So this would be a 3. We'll call this a 4 buy zone. And then after this, you'd have a spring off the bottom into wave 5, and that would take out the high of wave 3. We cannot really draw a target for wave 5 yet until we get the bottom in, okay? Because one of the anchoring points for a fib extension is the bottom of the pullback. And I don't think we've got that yet. All right, so The fear and greed, ERI, is indicated overdone. So that's why we got the bounce here. So that's kind of cool. See these little Fs? That's our ERI indicator, which measures fear and greed. And that gets triggered at certain times when the market gets overextended or manic or emotional in one area. So we've kind of had a situation here, 15% of the time, wave 4's end between the red and blue upper line. 70% of the time, they get into our high probability target area. 15% of the time, they go lower, which means also a lower high when that responds, but not into wave 1. Okay, so it can't go into wave 1. So it's not hit the target zone down here. We have maybe a possible reversal. That's what our ARC reversal bar is indicating up there, that 2B. So the long-term charts say probably one more leg down. All right, so an A, B, C. All right, you got a 15% probability that this is the ABC. Okay, so 70% not done yet, 15% possible. So what do you do? Well, I go with the percentages. Now, with that said, if you're dying to get into this, you could trickle in. All right, so if you have $10,000 you want to put in, I'd maybe put $2,500 in if I'm dying not to miss it. But honestly, let's take a look at the lower time frames and see if they're giving us any clues as to possibilities. Okay, so here's an interesting thing. Red, green. So what does that mean? Well, it means probably we're going to make another high. Read from left to right. So this chart will happen first. This one will happen second. This one will happen third. So that's what you got to keep in mind when you're looking at all this. And the third chart, we've gone over already. So in the first chart, probably another high. We might come down a little bit and then one more high, which means this move up is not quite over yet. So we could still be in the long-term B wave. And then after that, we expect that. So short term, a little bit of high, but not good enough for trading it. Middle term with the red PTF, that's indicating the correction's not over, and the correction target zone is on the third chart. Hopefully that's clear. Okay, so if we didn't have the red PTF on the center chart, I'd be more apt to say that 15% is 15%. But now with that, looking at that, I'd say we're probably going to take that out and go down. All right, so that was kind of lengthy, right? But hopefully that gives you a good analysis. So I think it's going to come down. I'd wait for a buy in the buy zone on the weekly chart. All right, let's see what else we got here. Stuart, PAGS. All right, we'll do a couple more here and then wrap it up. I hear the NASDAQ calling me for day trading, so I got to get over there. NASDAQ really is my mistress. At least my wife says that. All right, so here's PAGS and PAGS for Stuart here. Okay, so it looks like we made maybe recently a new bottom, but we have a red PTF, Stuart, over here. So I commend you for looking at stocks bottoming, because that's how you get in early. But I think this one here, it's got a little more time. You got to give it a little more time. I see a spring off here. I see a spring off here, but that red PTF on the weekly chart drops it into a no-go. Okay, sorry. All right, CVS, long, CVS. All right. So yeah, I think you can, let's see how that loads here. I think you can stay long. I don't see any red PTF on the weekly chart. However, we've got a little bullish divergence here, but we still, oops, terrible drawing there. Give me 1 second. Still got bullish divergence here on this bottom here and a spring off the top here. So, okay, you know, it took out this high. I think it did. Let me just see, make sure I'm not imagining that. So let me go over here. All right, the high, I've got the data window on another page or monitor. Okay, so that's 67.34. That is 67.80. So it has not yet taken out that high. All right, so, okay. Question is, where do you put your stop? You're going to be forced to putting it at the bottom of this price bar here. Looks like it's going to close bullish. So that's a heck of a distance, right? So if we look at that price bar, the high is 67 and the low is 53. No, not too bad. But you need to put your stop under that price bar. Now, Al Brooks, the father of price action, would tell you that's a high probability trade to the upside, okay? Provided, all right, it doesn't get stuck in a range and go kind of like this, all right? That's the only thing with that. But usually a very big bullish price bar like that has follow through, okay? Even if it turns around. I mean, you can see it here on this price bar. You can see it here. Both those price bars resulted in follow through. So I think you'll probably get some follow through on that. Let's take a look at the bigger picture. You took out liquidity here. So you've got a support level here. So if we draw that in, it would be somewhere like right around there. So you got a kind of a support here and a bounce off that support. So that's pretty good. They washed out liquidity and took it up there. So they've done their job on the weekly chart. And you've got bullishness on these charts. Okay. Again, I feel like I'm chasing the market a little bit on this because it's gotten away from the pyramid. All right. But, you know, there's no reason not to be in this trade, really. Okay. It looks to me like you're going to see some follow through. Next thing is, where's the target? So if I go long, and I kind of like to know where the heck I'm going. And that's unless this is a major bottom here and we're going to pull up, then maybe we can shoot for some form of correction. And we're already there, though. All right. So I think until we get a pullback, I'm not going to recommend this one. Okay. Because you'll get a pullback at some point. And let's see how it goes. All right. So I don't disagree. Some people would take this, but I want to make sure that we have a significant pullback and then higher highs after that. I want to see a little bit better break in structure. We technically don't have really a break in structure too much, except for this little thing here and the pyramid here. So I think not on that. Okay. But we'll keep an eye. That's a close one. Okay. I'm scratching my head too many times. So when I do that, I usually don't take the trade. All right. BROS, and Eleanor is long in this one. The bros. She's in the bros. Well, aren't you good to be long in this one? How happy are you right now? All right. So I'm sure the question is, what do I do with it? Well, green PTFs across the board, pretty large owls across the board. So I guess stay long, right? Draw a trend line here. All right, for right now. And you probably will get a fill of this gap. Okay, gaps usually fill. But according to this, and this, after you get a pullback, you should get higher highs. So, you know, do you want to take a little off the table now and try to trade it and get back in after the pullback? I'll leave that up to you. But otherwise, just stay long, okay? And I'm not going to recommend this one because we probably are going to get some form of a pullback. We'll have to see, okay? Would have been nice to already be in. The pyramids did a wonderful job getting everybody in early, okay? So that's not an issue, but you've had 1, 2, 3, 4 P pyramids there on the weekly chart. You've got 1, 2, 3, 4, 5. So after 4, we kind of look for a little too late to get in, I guess is what I'm saying on that. But if you're in it like you are, Eleanor, you're in good shape. So I think I'd stay in it, okay? Just don't worry if it pull back a little bit into the 70s to fill that gap before it resumes back to the upside. All right, guys, that's it for today. I know I went over quite a bit, but you guys were so much fun, all right? This was a good day today. A lot of good things to look at. All right, so if you're interested, by the way, in keeping up to date, especially with the timing going on now, you know, like I said, the market's still bullish. However, we are in dangerous territory for a big reversal at some point. And if you want to keep track of that, subscribe to what we call the Market Opportunity Report or more. because I have specific levels and I look at it every week, and I do a video every week on that, as well as a detailed written report on the markets. And so you won't be caught like a deer in headlights if the market reverses. You're going to know by knowing what we're looking at each and every week to give us a heads up. So keep that in mind. It's called the Market Opportunity Report. It's not expensive, well worth it, and we give you stock picks as well. All right, and then finally, Gene says, give us a like. And yes, we appreciate you guys so much. All right, so we'll see you back here next week. Have a great week. All right, happy Valentine's Day to everybody out there. And all right, so we'll see you next week. Thanks so much. I'll put a little music on. Maybe I'll put the NASDAQ on a little bit, but I'll be closing the room real soon. Thanks, everybody. Take care.